Good morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion with your favorites analysts at Trade the Chain. My name is Nick Mancini, Director of Research, joined by Monte and CJ, Senior Research Analysts, and we are here to break down everything going on in the markets, macro, crypto, equities, commodities, you name it. We're going to talk about it. So the big news up for this week is Jackson Hole, and that is, what you're seeing a lot of volatility and positioning around, in my opinion. I'm going to pull up just a quick thing. I don't want to dive too much into the macro because I know it can get boring, but if you are watching tomorrow's Jackson Hole, you're looking to trade, the R star is the buzzword for Jackson Hole tomorrow. And for those who do not know, the R star is basically the neutral rate when you factor in both inflation and the terminal interest rate, which is currently hovering around 5.25 to 5.5%. So if you hear any language around needing to increase the terminal rates to meet the neutral level or the R star, if you're just anything that he is talking about that in reference to a rate hike in the future, I think you're going to see markets react very negatively. And then of course his typical language around either being data dependent, either being pleased with the data, being displeased with the data, needing to do more work to meet, the 2% inflation rate. So, there's a couple of core pieces of language that you should be listening for. You'll see the market react. Now, I would not probably recommend trading this live unless you really have a conviction, unless you really know what you're doing. But, a lot of this language is going to get factored into where momentum leads us into the end of Friday, and obviously into next week. CJ mentioned, last week, he was expecting a lot of liquidity to possibly come back into the market after Jackson Hole, and I do agree with him. But also, if it's the wrong kind of language, it could be a liquidity being sucked from the market, and that could also be a bad thing. So very important to listen to that language and what's going on tomorrow. It'll be live on CNBC, I think 10:30 a.m. So great to have the morning coffee with, have that on while you're staring at the charts. So other than that, guys, let's kind of pull away from the boring Fed speak. A lot of volatility recently. Nvidia crushed yesterday. I saw some analysts are predicting it to triple from current price. Maybe they're absolutely insane, but the street is definitely bullish on AI and the chip sector. But then we saw things pull back today. So before we dig into charts, what are you guys thinking? Are you guys thinking, Monte, and I saw you mention in the TTC community, this is indicative of some de-risking. How are you guys kind of positioning before Jackson Hole? No trades, long, shorts. Do you guys even want to mess with this or just kind of wait till the speech is done?
Well, for me, I think I'm going to just wait until the speech is done. And yeah, like you said, I mentioned in our Discord community, we're seeing some textbook signs of de-risking. If I can quickly pull up my chart, just take a look at the watch list. You'll see the Q's down basically twice what the NASDAQ is down. That is textbook sign of de-risking behavior prior to a catalyst. So I don't want to be investing in these high beta stocks right now. However, I do think there is a possibility for an injection of liquidity after Jackson Hole, and that presents a tremendous buying opportunity. And also looking at rates, it does look like they may have topped out here at 105. If we get some bullish price action after Jackson Hole, I expect this to continue going down. So The names I'd be looking at are pretty simple, or the ones that have been kind of beat up the most, the ones we've been talking about a lot. Things like Riot, I think, is good because, it's already really round tripped the whole ETF news. Mara still has a little bit of room to the downside, so maybe be a bit more patient on that one. And then, of course, Coin, CJ's favorite, I think will be a great buy following Jackson Hole. I think all of these will perform tremendously well if we do get an injection of liquidity following Jackson Hole, which wouldn't be surprising because right now we're seeing all the signs of de-risking. Whenever you see the NASDAQ and, innovation stocks underperforming relative to industrials and like more retail based stocks, it's a sign that speculators are de-risking. They don't want to be involved in the, highly risky assets. And therefore, I think we could see a strong bounce back effect following Jackson Hole, following that, de-risking of, the market. So that's kind of where I'm at from a macro perspective. And I'm just eagerly awaiting this catalyst to be behind us because I've got, I'm ready to deploy this capital. Been waiting, and these prices are looking more and more favorable by the day as we pull back.
So are you kind of implying that we could see some a bit more downside, around Jackson Hole, maybe some overreaction, but provided that, we see a nice little sweep of those lows that you demonstrated, that would kind of be a trigger for you to buy? Or, what would your trigger be? Kind of dropping below those lines you drew and then coming back up, or just any significant drop, you're a buyer?
Yeah, for me, I would just wait for signs of strength, a bullish engulfing candle at the bottom of a downtrend. I mean, that hasn't always worked out. Like, Coin, for instance, had that, and today we're getting bearish price action. But again, I do think that's just de-risking. So I think the trigger for entry would be signs of injection of capital, which would be first and foremost an increase in volume, and then second, the candle formation. So I'd want a bullish engulfing candle at the bottom of a downtrend. I think that would be the trigger for entry for me. And actually, if you wanted to even be a little bit more conservative, I would get 1 day of a bullish engulfing candle, wait for 1 day of continuation, and then enter the trade. That makes the likelihood of continuation a lot higher than if you just have one bullish engulfing candle. When you get that day of continuation, it tells you that there may be a trend forming, and that's a trade I want to be in on, is a trend, not necessarily just, trading level to level.
All good, all really good points. And before we bring CJ in here, one thing I do want to note that I'll also text of what Monty's saying, because I do think that it's, some more downsides likely, but whether or not that gets bought back up or gets shoved down lower, I think may very much depend on what the dollar does. Yesterday, early in the week, we saw the dollar spike up. Equities did not, at risk, did not perform well. We saw the dollar, drop like a rock back down yesterday. Equities and your crypto and equities performed quite well yesterday. Now we're seeing it spike back up again. And obviously crypto and equities not performing that well today. So clearly, someone or something is focused very much on the dollar in terms of liquidity movements. And so if we continue higher, that would likely signal more downside. And obviously if we move back below, down, to 103.5 or lower, that would probably signal more upside. So I think that this is also an important thing to keep keep your eye on in the context of Jackson Hole and kind of what Monte was describing. But CJ, what are you looking at heading into Jackson Hole? We know Labor Day is typically when the good traders come back from vacation, and typically we'll see a little bit of a spark, and obviously that is very close in the future after Jackson Hole in just a week. So, do you agree with Monte? Are you being patient? What's your outlook?
So I do think that if you think of like the logical points, what I've been thinking of is like, obviously August is typically a very bad month for stocks. We've seen that. We're wrapping up the last week of August now. Also Thursdays, I think second worst performing day for stocks next to Monday. Kind of makes sense. We're seeing a lot of de-risking today, especially prior to the Fed speak. But we'll see ultimately how tomorrow closes. Right now, I'm long, I'm long coin. From a technical perspective, like we had a bullish engulfing candle yesterday, so I thought that was pretty much like it's never going to be perfect, but it was good enough for me in that sense, and it gives you like a place of defined risk either way. And now that you're seeing bids come in today, I might buy a little bit more in front of Jackson Hole. Also, something to keep in mind as well is like historically, when we've had some poor performing weeks going into Jackson Hole, we usually have seen like opposite price action following. So maybe we see some bullish price action after that. But that's kind of how I've been positioned. I can go into other specific trades. I'll just bring this one up.
Feel free.
So yeah, coin's the first one I've been looking at. Largest position, hoping to hold that till 2024, and looking for the stock market to potentially continue up and make new all-time highs. Going throughout the end of the year. That's still kind of my general thesis, and we'll find out more tomorrow. But I think that's kind of has yet to be negated. We'll see. My open trades as of now, I've been short heating oil this whole week. Pretty disappointing considering what crude has done. It's sold off pretty hard consistently. But I'm still going to be in that one until I get stopped out if we go above Monday's high. Cocoa has been hurting me today as well with just some bullish price action, but haven't gotten stopped out, so really no need to do anything. One position I entered today, and actually we have 14 minutes until the close, but this is coffee, and so this is kind of showing me enough. A lot of crowded longs in this particular, or crowded shorts in terms of speculators in this particular position. So something that could definitely have the potential of a short squeeze here. Maybe get lucky, catch a couple limit up days like we had back in January. Platinum's been the best thing this week, even today, amongst a strong dollar and gold being down and silver being down. Platinum has still had some resilience, so that one's been favorable. And just Bitcoin futures, but not doing particularly well today, obviously, with the sell-off. But that's basically all I'm looking at. We'll adjust those positions accordingly. But overall, I'm still long headed into Jackson Hole. I think there will be volatility, but I'd rather be long now and have a nice determined stop. And I got to wait for the close in order to determine the stop. Like if we go down, but people bid it up into the close, there's no point in exiting prematurely. So
Man,
I would rather
the
be
close.
Sorry, last thing. I would rather be in a little bit early at this point as opposed to having to chase following Jackson Hole. That's all.
Not bad advice. And I think speaking of the close, equities, I was thrown in a couple of, volume increases from, S&P futures closing each day around 4 p.m. And, whoever's been buying or selling at the close is clearly knows what's up. The past couple of days, the buys, have led to higher prices in the next U.S. session. The sells have led to lower prices in the next U.S. session. So CJ makes a good point there, and it's never 100% correct. And if you're simply trading off of what people are doing at end of day, you're probably not going to be super successful long term. But there are times when people do seem to know what's going on, and paying close attention to what happens at that close is definitely important. Especially if you're trading large stacks or relatively quick movements. So I really like that suggestion. Speaking of equities, one thing I wanted to bring up, for both the crypto and the equities crowd is this correlation. And for those of you who listen to our shows and have been following us for a while, equities used to be very closely correlated with Bitcoin and obviously to some degree Ethereum. So it dissipated for quite some time, but now it seems to be back, and it's not fully back, but just looking at this chart, we've got the S&P futures and the candles, and we've got Bitcoin in orange. And the peaks and troughs for the most part are relatively lined up. And I think that also kind of goes to show how significant the dollar has been on price action, because, if we kind of draw that inference, it's kind of shoveling both of these assets around. Fortunately, the market makers have a correlated, algo running, which makes trading a little bit easier because equities have been running quite technically, whereas Bitcoin has been, sometimes difficult or annoying. So figured this was worth pointing out to anybody because of Jackson Hole tomorrow and any crazy swings or volatility that we may see. If it's reflected on S&P futures, NASDAQ futures, then it could very much also be reflected on the Bitcoin chart. So wanted to make sure everyone was aware of that, just because things could get a little bit wild over the next week or so. One thing I do want to pull up is Bitcoin, and we're just still kind of sitting in a range for the most part. We broke out of this lower range, got back up and grabbed some of this liquidity up here that we met last Thursday and last Friday, and now we're seeping into that lower end of the range, and we're below the weekly VWAP. And so, what I would look to in the short term, as we look into Jackson Hole is, one of these lows, at least, towards the end of today's session. Now, if we get back above the weekly VWAP, then kind of in Monte's tone, that definitely helps with outlook heading into Jackson Hole. But right now, it does look like we're probably going to tag 25.8. 25.6 in the near future. And then we still, and I hate to say it because I don't enjoy being a bear, but it needs to be said that we have not swept the lows from last Friday. And typically before any significant move higher, you're gonna sweep, an extreme price action level. So I'm not really predicting that extreme of a move yet, but I do think, before we start, slamming up against, maybe 27.1 or higher, it would be likely that we tag the lows first. And that's just kind of typically how Bitcoin moves. So, it's never one-to-one, but very important to mention. Go ahead, CJ.
May I ask, why, what's the logic behind sweeping the lows? Is that just to take out stops, or why?
Yeah, it would basically be to kill longs. And then, the classic Bitcoin volatility, kill your longs and then long in into oblivion. Like I said, nothing is, 100%, but typically the way Bitcoin trades these kind of week over week moves is you sweep the weekly lows or the weekly highs before then continuing in a new direction. So it's just, I really don't think that this is found as much outside of crypto, but it's a very common crypto pattern. So it's worth mentioning. But yeah, I don't even think ETH is worth going over too much. Maybe we kind of Monte, to kind of bring it back to ETH BTC. We used to talk about this a lot. Obviously, has not been worth talking about because of look where it's just been sitting. But I certainly wouldn't want to long this at all right now. If you had to ask me, I mean, that sweep does look good, but again, we did not sweep the full lows. It doesn't appear. So it's just annoying price action. But the ETH is going to follow Bitcoin, and I think it's going to do worse than Bitcoin in whatever direction it goes in. Meaning, if it goes down, it'll move harder than Bitcoin. If it goes up, it'll move slower than Bitcoin, if that makes sense. So,
yeah, I think that makes perfect sense. And yeah, I agree that ETH's not worth really mentioning right now, but I mean, it is kind of, in many ways, I kind of see it as like the cues to Bitcoin being the ES, like it's, just a bit higher beta, and like the gateway to more risk on assets. If I could
ETH is the gateway drug. Monte said it.
It is. ETH is the gateway drug to the alts. Once you start trading ETH, it's only a matter of time before you start trading alts, and then from there, it's only a matter of time before you're living out of a box. No, I'm just kidding.
Yesterday's one day looked so promising, and then look at today.
I know, right? Yesterday looked like we were, gonna actually see some really nice price action. We were actually talking on a team call, and 1680, highly critical level for ETH. You can see that all the way back, here it acted as support and resistance. We've seen a lot of ETH in terms of volume at price distributed at about 1690. So that makes this level highly critical. So if you are going to short this, I actually don't mind like the formation that we have going on here. That's kind of like bearish pennant. And at the very least, like, I think that we could see, you know, a move down from current price to the wick. And then, of course, you have this candle here as your stop. Anything above this candle, you're out. So something like that, maybe. I mean, the risk reward is not that great, 1.62, but I still think that, you know, in general, because it is the kind of gateway to the alts, if we do get this negative price action and this target does get hit, I think that we could see a lot of alts hit really hard. And I saw Dustin mentioning theta. That was something that I mentioned like last Tuesday on this show, and that was more of a short-term play based on sentiment. But nonetheless, I mean, I think you could say the same thing for pretty much any altcoins, right? Like, this is a dangerous place to be at.
It's so hard to short that because you know it could the floor could drop, but it could sweep the lows and you're sleeping, you know. So
yeah, like one thing that definitely is possible when you see something like this, right? Like this is a very tempting short, and whenever you see something that looks very tempting, it opens up the possibility for a trade becoming overcrowded. Now, is theta overcrowded? Last time I checked the funding rate, it wasn't overcrowded. Sentiment was negative. What? Go ahead.
Can we bring up the funding board, please?
So
one thing. Oh, go ahead.
Is it not worse? Mine looks a lot worse in terms of bullish.
I mean,
why is the 24? Why is everything negative on the 24?
The funding rate? Because people are shorting.
That's the volume, CJ. It's the volume's down.
Yeah, 24-hour volume on basically across the board. And again, you can see it reflected here as well. Like ES, Qs, heroin.
No, also, another thing I like to do on this is sort by the funding rate. Go to like the most bullish funding rates. This is fun if you really like using leverage. Do the most bullish ones. Yeah, this one. So if you really like using leverage, or you want to practice some of your technical skills, maybe with very low dollar amounts and higher leverage just to practice, those coins with very, very low funding rates are fantastic to trade.
Man, this thing's nearly touching -1%. I don't think I've ever seen one.
Yeah, LPT, BLZ, Acro, and a few others have been just, I don't know how they do it, but they've been keeping the funding rates insanely low. And if you go look at the LPT chart, it's been crazy. Same with BLZ. But, you know, it's interesting just to kind of go to those because obviously, you know, people are getting paid to long. So obviously the volatility is going to be crazy. But you know, it's an interesting thing if you're ever bored or there is no volatility on Bitcoin, go sort by funding rates. You'll find some volatility pretty quickly. So
I have a theory that there's like 1,000 people left trading crypto, and like you're seeing somewhat neutral to bearish funding rates in Bitcoin and ETH and some of the majors. But when you go down and you look at like DOT and you look at BCH and you look at Chainlink, everybody's expressing their short views through the altcoins, and they're heavily shorted with very negative funding rates. Like Matic, prime example. You have influencers who are posting it
right now.
Yeah, but like they're one of the largest influencers is posting in his Telegram group about how he's shorting Matic. It's like if 45,000 people are in that group and they're just gonna follow into that trade, like it's just crowded. Like
then
if it doesn't work, it's gonna work. Yeah, it's making the R&R poor. Is all I'm saying.
No, I don't disagree with you. That's why I've been weary to suggest anyone start shorting, just because the volatility has been absolutely insane. It's been everything that I'm doing is a few hours max these days. So, But speaking of that, one last thing I wanted to bring up before we got to go, because we're nearing the end of the stream, is just wanted to point out this open interest and the lack thereof. And if we kind of zoom out, I'll normalize this data, but the highs, the high of open interest is obviously near the lows, and we've dropped. I think what the high was 170K open interest, 170K Bitcoin open interest, and now we're at 80K. So it's dropped by more than half. And we've only risen, I guess 100% from the lows, not even. So that to me is extremely concerning moving forward. And if this does not pick up after Jackson Hole, then I think we're going to have a much larger problem on our hands. So for the bulls, I think you definitely want to see some green candles on this open interest charts before or after Jackson Hole. So. But that's the last thing I wanted to end with, just because that's kind of something I track, day in and day out, week over week. It definitely shows, open interest is at the most simplistic level. What is the interest in using leverage on this asset? And if there's no leverage, it's going to move like a very slow kind of like a gold almost. So we want the leverage. So last thing I'll say.
You make fun of the commodities and their implied volatility. If you just add enough leverage, anything will become like a tool.
I don't disagree with you there, but
like you're not supposed to use it 125x unless it's like the dollar or something. But
says
crypto has. Anyways,
you're not banging 1000x trades on Rollbit every day, CJ. What are you doing, dude?
CJ's 1000x long oats right now.
Yeah. All right. Well, we appreciate everybody joining in chat. Shout out Barbara. Apologies about that. Shout out Joe. Shout out Justin. Shout out Brian. We appreciate you guys being in there, following us. Again, we do this show every Monday and Thursday. Catch us, at typically 2 p.m. We did a bit of an early show today due to some scheduling stuff. Please catch Monte and CJ every morning at 10 a.m. for their Money in Motion show. We got a bunch of content going out daily to our subscribers and some content for non-subscribers to make sure they get some good info. We have a 14-day free trial at tradethechain.com. And if you look in the YouTube link, we have some fantastic opportunities for those who want to trade either from a decentralized exchange, or I should point this way, DYDX decentralized, or BingX centralized exchange, depending on whatever suits your fancy. We got some good deals for you. So good luck. Happy trading. We'll see everybody on Monday, and watch out for that Jackson Hole tomorrow.